Hey everybody, welcome back to another episode of Dad's Gone Crypto. So the other day I'm hanging out with some friends and one of them that's, just starting to get into crypto, he comes up and he's like, "Hey man, I keep hearing about this new RWA thing in crypto. So what is that? Is that like a new coin or something?" And I laughed because I was like, it really shows where we're at. Regular guys who don't really care about DeFi or NFTs are starting to hear about RWAs or real world assets. So because of that, I was like, hey, why don't I do a little show and just talk about what real world assets are in crypto and, what they mean to the industry. So the real thing here, it's not just another hype cycle. This isn't some meme coin pump or a temporary trend. This is about connecting the trillions of dollars in the real world, housing, bonds, gold, art, you name it, connecting all of that with the blockchain. So think about it. Bitcoin gave us digital gold. Ethereum gave us programmable money. But RWAs, they could give us digital ownership of the real world. And today we're going to do a deep dive into this. We're going to talk about what RWAs actually are, the history that set this up, why now is the moment that this is starting to explode, real world examples like tokenized treasuries, real estate platforms, even Pokemon cards, and the platforms that are live today. Most importantly, we're going to talk about why this matters for your future wealth, for your kids, and possibly generations to come. So buckle up and let's get started. All right, so let's define this in simple terms, right? A real world asset is something you already know and understand, like a house, a bond, a gold bar, a painting. In the traditional financial system, these assets are bought and sold through slow, complicated, and exclusive processes. What tokenization does is create a digital twin of that asset on the blockchain. That digital twin is represented by tokens, and each token corresponds to a piece of the real world thing. So think about it like monopoly money, but instead of fake cash, these tokens are cryptographically secure, tradable 24/7, and recognized by smart contracts. They're backed by the real world asset itself. So a house can be split into 1,000 tokens, and each represents a fraction of the deed. A bond can be wrapped into a token that pays interest automatically through a smart contract. A gold bar can be represented by a token, and now you can trade gold instantly without ever moving the physical metal. This is not a new concept. Wall Street has been slicing up and securitizing assets for decades. Mortgage-backed securities, ETFs, REITs, but those systems are clunky, locked behind brokers, and limited to big players. Blockchain is doing the same thing, only with fewer middlemen, faster settlement, and global access and transparency. So let's talk history. To understand why RWAs are a big deal, we're going to look back. The last 50 years of finance have been all about securitization, finding ways to slice and package assets so investors can trade them. In the 1970s, mortgage-backed securities became a thing. Suddenly, banks weren't just holding loans, they were bundling them and selling pieces to investors. In the 90s and 2000s, ETFs, or exchange-traded funds, took over. Instead of buying a single stock, you could buy a basket and it was instantly tradable. Then, real estate investment trusts, REITs, did the same thing for property. But here's the catch. These systems are still run on paper, databases, and brokers. Trades settle in days, not seconds, and access, forget about it. If you're not an accredited investor or if you don't live in the right country, you're shut out. Now, fast forward to the blockchain era. Crypto showed us that you can move billions across the globe in seconds. You can program money to pay yield automatically, and you can cut out all the middlemen. So the natural next step is obvious. Take those old school assets, bonds, real estate, commodities, and bring them into this new system, and that's RWAs. So that's the history, but let's talk about the why. why does this matter? And why should a dad in Ohio or Florida or anywhere else care about RWAs? So let's hit it from a few angles. First of all would be access. Right now, the best investments are locked behind gates. You want to invest in private equity, hedge funds, prime real estate, you need millions and accreditation. With tokenization, a dad with $100 can buy into the same asset class that billionaires are in. And you've got efficiency. Traditional finance is slow. Wire transfers, settlement delays, middlemen taking fees, but tokenized assets settle instantly. No waiting 3 days for a trade to clear, no bank holidays. Then we could talk about global liquidity. RWAs break down borders. A guy in Brazil could own a slice of a rental house in Detroit. A dad in Thailand could hold US Treasuries without going through a US bank. So liquidity goes global. Then, of course, there's transparency. Wall Street runs on opaque systems. Ever try reading a bond contract? Blockchain puts everything on chain, visible, and verifiable. And then finally, we could talk about generational wealth. Now, here's the dad angle. RWAs could finally give us access to stable, cash flowing investments, things you can pass down, a portfolio of tokenized houses, bonds, commodities in your self-custodied wallet, not locked in some brokerage that freezes your funds when the market gets rough. Now, this isn't about hype coins or chasing moonshots. This is about boring wealth, the kind you can sleep on, the kind you can hand to your kids, and in long-term investing, boring is beautiful. All right, so let's get into the juicy stuff. Who's doing this today and what assets are already tokenized? So right now, there's tokenized bonds. Ondo Finance is doing tokenized US Treasuries. Their token, OUSG, is backed by BlackRock short-term Treasury ETFs. You've got Maple Finance that's tokenizing corporate credit. It lets investors lend to businesses on-chain. You've got Backed Finance, based in Switzerland, issuing tokenized versions of ETFs and bonds. Now, why this matters is that bonds are the biggest market in the world, and treasuries are paying 4 to 5% yield, safe, stable, with global demand. Now, you've also got tokenized real estate. Some of the players in that are RealT. They tokenize US rental properties. You can invest $50 or $100 and your rental income is paid back weekly in stablecoins. There's Lofty AI, which is a similar model and tokenizing rental properties. You've got Proppy, which tokenizes real estate transaction and even entire property titles. So basically, buying a house online. And we do have another episode where we talked a lot about these particular platforms. So I'll link it in there so you can check out that episode as well. But so why this really matters is that real estate is worth over $300 trillion globally. It's the largest store of wealth humans have, and tokenization opens it up to everyday people all across the globe. Now, we've also got tokenized commodities. Pax Gold, for instance, each token is backed by 1 ounce of gold stored in London vaults. And you've got Tether Gold, XAUT, which is the same deal, physical gold backing digital tokens. Another one is Centrifuge. Centrifuge tokenizes invoices and receivables, turning boring business paperwork into tradable, yield-bearing assets. So why does this one matter? Well, commodities are real, tangible, and inflation resistant. Gold tokens trade like crypto, but carry the stability of physical gold. And we've also got tokenized credit and private lending. So Goldfinch provides loans to businesses in emerging markets, and it's funded by tokenized pools. And we've got Centrifuge again, which businesses borrow against real assets like invoices. So explaining that one a bit, like if a business has all these invoices out that are, 30, 90-day, net terms, they can actually borrow against them on Centrifuge and get the money right away rather than having to wait for those invoices to get paid. Maple Finance is another one that's offering enterprise lending. And you can actually go on Maple Finance as an individual investor and lend corporations money. Now, the reason this all matters is because it opens up lending beyond banks. You can become a lender and earn yield normally reserved for the big institutions. Now, another kind of fun one is tokenized collectibles and alternatives. Courtyard.io is tokenizing Pokemon cards, if you can believe that. You can own a fraction of a rare Charizard and trade it instantly. And then there's Masterworks, which lets you buy shares of fine art like Banksy and Warhol. Not fully on chain yet, but it's heading there soon. And you can also get wine and whiskey tokens. There's lots of platforms that are experimenting with tokenizing high-end wine and, super rare old bourbons and whatnot. So the reason this matters is because alternative assets are exploding as people look beyond stocks and bonds as a place to park their money. Tokenization makes it easy to diversify into those kind of assets. Now, talking about tokenizing all these assets, there's something very important we have to look at, and that's that not every blockchain is designed to handle RWAs well. Ethereum and Solana are powerful, but they weren't built from the ground up for regulated assets, and that's where something like Redbelly Network comes in. Redbelly is a blockchain that was specifically engineered for RWA tokenization. It focuses on compliance and regulation baked in at the protocol level, and identity and verification, making sure assets are tied to real-world entities. It's also got high throughput for handling institutional scale transactions and partnerships around things like private equity, carbon credits, and real estate. So while Ethereum is the general purpose giant, Redbelly is like a specialized tool, purpose-built to bring trillions in real-world assets on-chain safely and efficiently. And that's a really huge deal. Okay, so why is the RWA narrative exploding right now? Why is everybody and their brother out there talking about it? The real reason is because institutions are in. BlackRock, Franklin Templeton, Fidelity, they're all exploring tokenization. BlackRock's CEO literally said the next generation for markets is tokenization. That's the biggest asset manager on earth, making it clear where this is going. Another reason this is happening right now is because DeFi needs real yield. All the yield farming craziness back in 2020 and 2021 was unsustainable. People were making tons of money on the yield, but it started to fall apart. But people still want yield. So RWAs bring real, boring, dependable yield into crypto. Treasuries, rental income, loan repayments. Again, it's boring. It's not pulling in, 100% APY, but it's stable and it's real. Now, another reason that this is, happening right now is because stable coins are already tokenized dollars, and stable coins have proved the model can work. Trillions of dollars are flowing through them every year. And if we can tokenize money successfully, why not bonds, houses, or art? Now, the last and probably most important reason that this is happening right now is because the tech has actually matured to allow it to happen. Better custody, clearer regulation in some countries, Ethereum scaling, more secure smart contracts. The infrastructure is here now in a way that it wasn't here 5 years ago. And that's where purpose-built blockchains begin to shine. As we just said, like Redbelly Network, they're part of this new wave of infrastructure designed to meet compliance needs, handle identity, and scale to billions in transactions. It's the right tech at the right time. And that's, again, probably the most important reason as to why this is happening right now. So this all sounds great and all, but of course, there's always some risks. So let's not get carried away without looking at them. So the first one, trust and custody. How do you know that that token really represents a bond, a house, or a bar of gold? Who audits it and who holds it? That's a question you really need to ask yourself. Another one, liquidity. Just because it's tokenized doesn't mean it'll be easy to sell. You might get stuck with a tokenized asset that nobody really wants. So that's another area you've got to be really careful about what you're buying into. And of course, there's always smart contract risk. Hacks happen. If a contract gets drained, your RWA token could vanish. And of course, always geopolitical risks. Governments don't like losing control. And if tokenized treasuries start threatening traditional markets, government agencies could step in hard. So opportunity is huge, but it's not risk-free. So as always, dads, we need to balance the upside with the reality check and make sure to do your homework and due diligence before investing in any of this type of stuff. So here's where we land on all this. RWAs are not just another crypto narrative. They are the bridge, and they're what happens when crypto stops being an island and connects to the mainland of global finance. They promise access to investments that we've all been locked out of: efficiency and speed, global liquidity and borderless markets, transparency and fairness, and the chance to build boring, reliable, generational wealth. The platforms are already here. We mentioned Ondo, Maple, Backed, RealT, Lofty, Pax Gold, so many. This isn't just theory, it's absolutely live right now. And keep an eye on the infrastructure too, not just the assets. Again, platforms like Redbelly Network are building the rails for the RWA future, where assets move globally, but with compliance and security built in. So the only question is, do you want to be early to this, or do you want to wait until Wall Street has already eaten the whole pie? So tell me, would you rather hold US Treasuries in your Fidelity account or in your MetaMask wallet? Would you buy a slice of a rental house in Miami just to test it out? Would you tokenize your own house if it meant unlocking the liquidity? Drop your answers in the comments, smash that like button, and share this with another dad who needs an education. Any of those guys out there that think crypto is still just Dogecoin and TikTok traders. So remember, guys, keep your burgers unburnt, your wallets unrugged, and your eyes on the future. See you guys. The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.